Hey, what's good, y'all? It's your boy Dylan, back at it with another one. And I get this question a lot, so I decided to make a video on it. Today, we're going to be talking about the differences between support and resistance and supply and demand. Traders often confuse support and resistance with supply and demand zones, but they're definitely not the same. Today, I'm going to be breaking down the differences so you know exactly when to use each in your trading. What is support and resistance and supply and demand? First, let me start off with support and resistance. Support and resistance are horizontal price levels where the market has rejected from multiple times in the past. Think of it as a line where price bounces or gets rejected from. It's just a line on your chart at highs or lows. It's obvious. So supply and demand, on the other hand, are price areas, actual zones, not lines, where big institutional orders are sitting. They're created from strong moves away from consolidation areas or where the market agreed on price. Doesn't that just sound like a better approach when you're trading? I would rather trust areas where institutional traders' orders are sitting rather than just going off a line, the obvious line that they use to take your money from. But hey, to each his own. How do they form? So let's start off with support and resistance. Support and resistance levels are formed by repeated touches of highs, which are resistance levels, and repeated touches of lows, which are support levels. Supply and demand is formed when price leaves a zone with an aggressive rally, leaving behind a demand, or when price leaves a zone with a sharp drop, which creates a supply zone. This shows where the banks and hedge funds place large orders, and we're just waiting for them to get tapped into so we can trade with them. That's the whole concept of supply and demand. Here's an example of a support and resistance. This is support and this is a resistance level. You see how we keep coming up here and we're resisting, the price is resisting. It's like a ceiling. So every time we get up here, we reject until we get right here. So when we hit support, this is the floor. Think of support as a floor and resistance as a ceiling. So every time we bounce from there, we bounce in between. We go to the other one. We don't do this all the time. This is why I don't like support and resistance because it's unclear sometimes. Um, so you see how this is why I don't like it. So you see how we broke. Once we broke, the institutions, they do this on purpose. They know that retail traders are selling right here. So, ooh, it broke. It must gonna go lower. So they sell, and where would you even place your stop loss? So they sell. Let's say they place a stop loss up here. They sell. The market chops around and play with you, and then guess what they did? They reversed the price. They bought. When you were selling, they bought. So you're shorting down here, and then they bought. They loaned the market. And it kept going higher. You probably had your stop loss right here. You might even have your stop loss all the way up here. That's stupid, but hey, people do that. So guess what? They took you out right here. They took you out right here. Or if you had it right here, they took you out regardless. And guess what you did? Guess what another retail trader did? Once we broke this ceiling of resistance, they bought without waiting on a retest. So they bought. I don't know where they would have placed their stop loss because there's no low. There's the this is the this is the other low right here, but they could go on a smaller time frame because this is the 1 hour chart. So it broke and they bought without waiting for the retest. So they bought and then the market went up and then it came back down and they sold. They got scared and they sold because the market was rejecting. They just lost majorly right here. And the market just used this resistance level as support. So this resistance got turned into support and it rallied up. When you want to trade a support or a resistance level, wait for a break and retest. Don't just trade right here. Oh, we rejected, boom, we rejected because it's gonna break. I like trading a breakout. I like to see what price does when it breaks if I'm gonna trade it. I don't like this trading from the zone because it's too manipulated. Because they'll dip, it won't be perfect. They'll make a long wick right here sometime, and then they'll go up, and it's just So here's a supply example. Doesn't this just look cleaner? It looks more trustworthy. So here are the institutions, the banks, the hedge funds. Their orders are sitting right here. So when they drop the market, when they tank the market, they left unfilled orders right here. And we want to trade along with them since we don't control the market. Retail traders, you have retail traders and you have institutions, smart money. They control the market. You want to trade with them. So since I know there's a clear picture, this never happened. We just see this drop. Since I know that they left behind an area where their orders are sitting, don't you think I want to wait until a price gets into that zone and then trade off of it? It just makes more sense. It's untapped. I didn't have to wait until a line got touched multiple times. All I had to do was wait for one tap and then I got my answer. It's just better. So here's a demand example. So you see how the institutions they just bought, they created an imbalance. So they bought, went up, and then when we came back, the price level was it's not a price level, it's an area. The area was unfilled, right? So once we filled it, once their orders got filled, the market went high. It went higher. It even broke this high. We want to get in right here because look, man, it's clear as day. It's an unfilled area where orders are sitting, and it's just a clear picture in my book. That's why I love supply and demand. It's my bread and butter. So who uses them? Retail traders use support and resistance, and they're often seen as psychological levels. If I was a market maker, don't you think I would want to take their money? Because that's what they're doing. So retail traders use support and resistance, and supply and demand are used by smart money and institutional traders since they're focused on unfilled orders. So, would you rather trust something that retail traders use as psychological, quote unquote, psychological levels? Or would you trust or want to trade with smart money, the institutional traders, the people that move the market, that focus on unfilled orders? I know I would. I would want to go supply and demand, but hey, to each his own. Which one is better to you? Please comment. I want to hear your guys' answers. Support and resistance. So support and resistance becomes stronger with more touches, but also weaker over time because each touch eats liquidity. So what that's saying is, what's really going on is every time your line on a chart gets touched, somebody is building their position to go against you, to F you, to take your money. Just think of it like that. Supply and demand, on the other hand, is strongest on the first touch back to the zone. Since it's unfilled, it's better, it's unfilled. So what's the trading approach? So support and resistance traders look for breakouts, they look for retests, they look for bounces or rejections. Um, Supply and demand traders, they wait for price to return back to the unfilled zone where the orders are sitting, and they look for confirmation. The confirmation signals could be a candlestick pattern, imbalances. So that's what we look for. Remember this. This is very important. Just remember this. Screenshot it if you want to. Support and resistance are like lines on a chart, while supply and demand zones are zones of unfilled orders. Mastering the difference could be the key to leveling up your trading strategy. Back test support and resistance and forward test it, and back to supply and demand and forward to supply and demand. After you do that, comment below which one is cleaner to you, which one makes more sense. Pay attention to everything because every time I see a support level or resistance level, it's crazy. I see a supply and demand zone near it. And that's not by coincidence because they use, I believe that institutions, the smart money, they use support and resistance to fake people out. You know what I'm saying? Like they'll break below support level and then they'll tap into a demand and then the price will just rally up because the actual orders got filled. They get retail traders, oh look, give them these levels. So y'all trading off the levels. Meanwhile, they're trading off of the zones that's below y'all levels or above y'all levels. That's just how I look at support and resistance. I don't like it. So if you like this video, man, please subscribe to your boy. Follow me on all of my social media. You see it right here. My Instagram is at Real Deal Trading. My TikTok is at Real Deal Trading. Here's my email for business inquiries. I also have a Discord community. I post my trade ideas. I'm active in the chat. I answer people questions. I do Q&As. I do weekly lives, live trading. Come mess with your boy. If you're interested, the link is below. On that note, man, I'm out.